Singapore's state investor Temasek and the central bank have both released their sustainability reports today. The portfolio value of Temasek's green investments is up $2 billion to reach $46 billion, and that accounts for about 11% of its total portfolio value. That's slightly lower than the 12% in the last financial year. $39 billion went to businesses with green products like those in the renewable energy space. The remaining $7 billion was invested to help carbon-intensive companies transition. While total emissions stayed flat, Singapore Airlines remains the top contributor. It accounts for 43% of the total portfolio emissions due to strong demand for air travel and cargo uplift. Temasek says it's working with the airline to decarbonize and switch to sustainable aviation fuel.
It is more expensive than conventional jet fuel, so we have to bring it down from an economic cost perspective. And so we are working on investing into sustainable aviation fuel and trying to deploy that at scale. We also are working as part of the Green Fuel Forward and enabling demand signals to happen by bringing in those who can actually buy some of the sustainable aviation credit to reduce the travel emissions footprint.
Temasek adds that it remains committed to its sustainable living investments and green targets, despite global trade uncertainty and pullback from other markets. The aim is to cut emissions by another 10 million tonnes of carbon dioxide equivalent by 2030 and achieve net zero by 2050.
Opportunity to invest alongside some of our strategic partners to take companies private and help scale them up faster. And then innovative technologies that are increasingly getting proven out. And therefore, we can be much more intentional on those that are building competitive advantage and geopolitical resilient and doing follow-on investments to help them scale and enable cash flow visibility as well. So we do see opportunity sets despite the headwinds.
Meanwhile, Singapore's central bank has changed its approach to green investments in a bid to lower financial risks and boost resilience. In its annual sustainability report released today, it said this allows it to be nimbler amid geopolitical and climate policy uncertainties. Now, the Monetary Authority of Singapore is now actively choosing investments for its equities portfolio to support the move towards a greener economy. This means experts make decisions on climate-friendly companies to invest in. Now, previously, it passively managed this, relying on climate indices to make investment decisions.
I think active management will increase the investor confidence in MAS trying to adopt green practices as far as their main efforts are concerned. And I think this really add to perhaps synchronization with returns. I think basically we are adopting a very long-term perspective that climate resilience is one of the key factors to determine the viability of investments.
The central bank will also gradually move towards corporate bonds from companies that emit less carbon. Now, MAS says this is part of its long-term efforts to reduce climate transition risks and protect corporate credit worthiness. It has also provided sustainable finance training for over 4,000 professionals across more than 100 financial institutions. Now, more than 8,000 people have also received skills badges for completing sustainable finance courses. And for more analysis on the central bank and also the state investors' green investments, we're joined by Professor Johan Sulaeman, who is Director of the Sustainable and Green Finance Institute at the National University of Singapore. Now, Prof, thank you so much for joining us today. Let's start with MAS. How will the change in investment approach help to minimize both financial risk and also help to boost resilience?
So I think the switch to more active strategy will help it to weather different market conditions that may hurt portfolios. So with the new and more active strategy, in the MAS will be able to weather climate uncertainty, but also commodity uncertainty and energy uncertainty around the world.
And in your view, was this more of a financial risk mitigation strategy, or do you think it's also a bit of a strategic and even perhaps moral positioning for Singapore to invest more in the green finance space?
I think it's both. I think it's both in the sense that I think it is critical to actually start shifting portfolio away from some of this what would be more risky investments in those that will be affected by transition risks. But also at the same time, I think the switch to, for example, in the bond portfolio, to companies or issuers that are less carbon intensive may also present some opportunities in terms of financial returns in the future, because this will clearly these companies have been able to manage its own transition risk better, and therefore potentially signal valuation premium going forward.
And all these pros aside, there are also some people who say that green investments have been criticized for performing when it comes to traditional assets in the short term. So how should central banks then weigh these trade-offs?
So I think there are several potentially conflicting issues here. There are various types of sustainable investments. Some are more defensive in nature, which is trying to avoid risks, but some could be more ambitious in terms of its expectation of future returns. And combining the two platform combining two strategies in the same platform can be quite difficult, right? So I think in the long run, the MAS and Singapore overall will benefit from this approach. But in the short run, I think the transformation into the new portfolio could be quite challenging.
Well, let's move to Temasek now. It has said that sustainable targets have not changed, but then perhaps how the company gets there might need some fine-tuning just based on the evolving circumstances. So what can Temasek do to stay nimble?
So for example, the increased emissions of Singapore Airlines, that's clearly good news for Singapore Airlines in some ways, right? Because it's clearly business is picking up. So in the face of such improvement in business, then clearly the only thing that Temasek can do is to actually, or Singapore Airlines, is to improve its energy efficiency, right? Improve its carbon emission. And it's actually quite difficult to do. And for example, the sustainable aviation fuel is still quite expensive. And because of that, the hit in terms of earnings, lost earnings by switching to sustainable aviation fuel too early may be quite difficult to manage in terms of the business risks. And as such, I think the Temasek will just need to continue to watch the space carefully, climate risk, social issues, and try to manage the risk, and at the same time try to take advantage of the opportunities. And that's why it needs to stay nimble. It cannot be forced to move only in one direction when the business condition is moving in the opposite direction.
And throughout all this, do you think the changes in strategies by both MAS and Temasek, will it help them hit their net zero goals? Is it enough?
So for Temasek, I think it's been able to reduce its portfolio emission in terms of the finance emission by quite a bit over the last 15 years. But there's still more work to be done, and I think the remaining work is probably more difficult than what they have done so far. So I think there's still a challenge. I think good progress so far, but it'll be quite challenging over the next 15 years. For the MAS, I think it's done quite a good job with its own portfolio, but supervision, I think, will be more challenging going forward. And I think the MAS has made a lot of progress, particularly in terms of climate risk analysis, climate stress testing, but more work is still there to be done, particularly in terms of the hard-to-abate sectors, as well as trying to build community that is more resilient to climate change.
Well, thank you so much, Professor, for coming in today and for sharing your insights. I've been speaking with Professor Johan Sulaeman, who is Director of the Sustainable and Green Finance Institute at NUS.